Hey everybody, welcome back to the Financial Freedom Show. My name is Rob Berger. In this video, we're going to do a walkthrough of Betterment. It's a robo-advisor, an automated investing service that I used many years ago. Haven't used it for a long time, but have actually moved our credit card rewards investment account from M1 Finance, where I had it for a while to test that platform. Now I've moved it over to Betterment to test the Betterment platform. And I want to show you some things that I've learned about Betterment. I will say overall, I really like the service. It's, for me, probably the top-rated robo-advisor. And having used it now, that hasn't changed. So I want to walk through that with you. So let's get started. This is my actual account. You can see my balance here. This is the balance of our credit card rewards. For those that don't know, we invest all of our credit card rewards. I've done that for a couple of years. It was actually higher than this. But as we all know, stock market has been down this year. And so this is Betterment. And what I want to do, a couple things on this home page before we get to the actual investment account. The first is, you notice this says net worth, and the only thing I have connected to Betterment is this one account. But you can connect all of your investment accounts, whether they're at Vanguard, Fidelity, Schwab, another robo-advisor. And that can serve two purposes. One, you can see all your total net worth here, or at least your total investment balance if you want to, and you can see the breakdown. But the other thing Betterment will do is factor in those other accounts in its recommendations to you. So that can be a very important feature, and it's something that Betterment offers. It, say, for example, Vanguard's digital advisor service, at least at the moment, as far as I could tell, it doesn't offer that, at least not in the same robust way that Betterment does. The other thing I want to point out, you see here, I can talk to an advisor if I want. I don't need to, but you may want to. And there's a couple of different ways you can pay for that. This service, as it stands, costs 25 basis points. That is on top of the expense ratio of the investments that Betterment will allocate your money to, which we'll look at in a minute. You can pay a higher fee, I believe it's 40 basis points, to have access to an advisor. I also believe you can talk to an advisor sort of on a one-off basis, I believe. But I'm not going to do that, so I'll dismiss that now. And so this is the account, and you can schedule deposits. So you can see down here, I could do a automated, you can see it here, set up recurring deposit. If you had an account you wanted to make monthly contributions to, very easy to do. You'll see your performance here. Mine is zeroed out because I'm literally in the process of transferring this money to Betterment. And actually, the transfer, if it doesn't complete today, it'll complete early next week. So I haven't earned or lost anything yet with Betterment, but there it is. And then the other thing I want to point out before we dive into my specific investments is that you have different goals you can plan for through Betterment. You can see you can plan for retirement, and you can even do that in a taxable account, but they offer IRAs like a Roth or traditional. And you can also, maybe you want an emergency fund. So you can see that's an option here. And you can have multiple goals, and they can include buying a home, for example, or saving for a child's or your own education. And the recommendations that Betterment will give you will vary based on the goals that you set. And I found it very easy to use. We'll see some of that as we go along, but I thought it was pretty slick the way they did it. So having said that, one other important thing. This for me is an individual account. I don't have it as a joint account at the moment. I do have my wife listed as the beneficiary. You would do that down here in settings. I won't walk through it, but it's very easy to do. You can do it online. You don't need to involve anyone at Betterment. You can also open up a joint account, and it's a little tricky to do that, at least I felt, because at least if you start with an individual account, but you can make it a joint account by either adding another account or goal. You can see here the add new. Again, I won't walk through it. The real key takeaway is they do offer joint accounts. Now, obviously, if it's a retirement account like an IRA, that's an individual account. You can't have a joint IRA. So with that, let's take a look at how I'm investing this money. Remember, at M1 Finance, I was investing in two bank stocks, Wells Fargo and Bank of America. By the way, I still own those companies. I just took the balance of our credit card rewards and just moved it here. You can see this is what it was on the date of our transfer. And so here it is. And there's a lot going on, a lot that Betterment can offer, and I want to walk through a fair amount of it here. The first thing I want to look at, you see it says set up a tax coordinated portfolio. And I'm going to actually change this here so you can see me. There I am. Hopefully that won't get in the way of the screen. But so this deals with asset location. So for example, if you had both IRAs, say retirement accounts, and taxable accounts at Betterment, and you wanted to have your investments spread across those different accounts in the most tax efficient way, Betterment offers that. They automate it through what they call this set up a tax coordinated retirement accounts, and it's very easy to walk through. They describe it. In my case, it doesn't really make any sense. I don't have any IRAs at Betterment at the moment, but I wanted to mention that. It's a really important feature if you're going to have both types of accounts at Betterment. So that's the first thing, and then go back into my investment account. Here again, another way to connect your accounts. I mentioned that earlier. It's very important if you want Betterment to take those accounts into account. So now let's go to the plan. And this is one thing I really like about Betterment is, all of the investing, even if it's just in my case, general investing, it is part of a plan. Now, in my case, I just made this up. You can see right here. I said, okay, I want $250,000 by October 2040. Who knows if that's very realistic. Obviously, if your goal is to buy a home or education for you or your children or retirement, you're going to have a more concrete plan. But here's the thing to point out is that whatever goal you set impacts how Betterment makes its recommendations for the investing. And here, let me just say there's a couple of things. The first is time horizon. So I put in 2040. We'll see how that affects my Betterment's recommendation in a minute. But if I had a shorter time frame, they would recommend a less risky portfolio, meaning more bonds, fewer stocks. If I said, 2040, no, I've got till 2050, then they might recommend even more stocks. As we'll see, with the current goal, they've recommended 88% stocks, 12% bonds, and I'm actually going to leave it like that for now. But the other interesting thing they do is it depends on the goal that you've set. So for example, there's a big difference between, say, buying a home or saving for an education and retirement. And the big difference is this. With buying a home, you're going to need the money all at once. So if you're 5 years out or 10 years out, once you get to buying a home, you typically need it all for a down payment. With education, maybe you spread it out over 4 or 5 years, but you still need it within a relatively short period of time. Of course, with retirement, assuming a traditional retirement, let's say of 30 years, you don't need all the money at once. You're going to spread it out over several decades. And so Betterment factors all of that into its recommendations, which I thought was pretty cool. So here, that was my goal, October 2040. And you can see they're telling me I'm very unlikely to meet that goal. That's fine. So based on that goal, they're recommending 88% stocks. Again, it has to do with the time horizon and how I'll use the money. And so that's what they're recommending. And we can see the portfolio in detail. Again, I think it still shows all zeros at the moment. It does. I'm using the core portfolio strategy. We'll talk about that in a minute. But I just want to show you all of the investments they're recommending and the percentages. They're all right here. And we can click into each one and it will show you the specific ETF they're recommending. This, we've actually talked about this on the show before, Vanguard Small Cap Value, and the amount. And the other thing they show are the fees. Now remember, I said sort of the base fee for Betterment is 25 basis points. That's on top of these fees. Now they use low-cost index funds, so they're very, very inexpensive, with the exception of International Emerging Market Bond Fund is kind of pricey at 39 basis points. But otherwise, they're all under 10, actually, I guess 8, they're under 8 basis points. Once my transfer clears and they invest my money, I'll see the balances for each one. So this is their core portfolio. I've not made any changes to it at all, and I'm actually not going to, but there is one thing I want to point out. This is a taxable account. So let's imagine I continue to invest our credit card rewards. I don't know, let's say I get to $250,000 by 2040. Wouldn't that be something? And in 2040, I think, I love Betterment, but I'm ready to take this portfolio over myself. I'm going to move it to Vanguard. Well, I don't want to incur taxes, which would mean I would need to transfer all of these investments in kind, which is fine, except that then I'm left on my own managing, well, I think this is 11 different funds if I counted correctly. So you really want to think long term. Now, if this is an IRA, it doesn't matter. You can sell within the IRA and not incur any taxes. But in a taxable account, you really want to think about what you're doing, not just now, but long term. Now, you may say, well, I like Betterment or whatever robo-advisor you might choose, and so I'm fine with that. But this is where Betterment does something that the vast majority of robo-advisors don't do, and I'll show you that here. We're going to edit the portfolio strategy for just a moment. Takes a second to load. Maybe more than a second. We're going to see that Betterment offers a number of different portfolios, including one you can design yourself. So here's the core. That's the one I've selected. They've got a socially responsible portfolio, if that's something you want to check out. They have a portfolio that's focused on technology. They have the Goldman Sachs Smart Beta. Frankly, not something that I would ever use, but it's there if you want to check it out. They have a target income portfolio. They also have a cash reserve. It's currently paying 1.1%, certainly well above a traditional bank, but I can tell you, you can do better than that. But it's still not bad. But the thing I want to point out here is you can actually design your own portfolio. So let's check this out. I'm not going to actually do it, but I want to show it to you. This would be good, for example, if, let's imagine you said, I only want, I want to do a 3-fund portfolio or a 4-fund portfolio. And you can do that here. And if you ever decided to move away from Betterment, you'd only have 3 or 4 funds to manage. Now, they do give you some things to think about. One of them is tax loss harvesting and tax coordination, which we haven't talked about yet, or at least the tax loss harvesting. They still will work, but sometimes with tax loss harvesting, it actually works better if you sort of slice and dice your portfolio into more ETFs. So these are just some, I guess, warnings or just alerting you to some information. But let's get to how this actually works, and it's very simple. There it is. So they have basically the same funds. There's VBR, we pointed out earlier, and the sort of percentages, right? And you can go in and just change these. So I could put, say, whatever, 60% in VTI. Now, one thing I'll point out is you can't do a true 3-fund portfolio unless you're comfortable with all developed international. They break out developed here and emerging there. So you could go with just developed, or you'd have to, if you wanted total international, you'd have to divide between those 2 funds. And then you could pick like an aggregate bond fund, which would be the AGG as an example. Of course, you know, you could do anything you want within this. That's just if you wanted to put together, say, a 3 or 4 fund portfolio. And they show you how this will change the diversification as you make different selections. The other thing they'll do, not relevant to me, and let me back out of this, but the other thing that they will do is, let's imagine I'm actually invested, my money's transferred, it's a year later, and I've got some gains, maybe there's been some tax loss harvesting, and I want to change my strategy. They will estimate the tax consequences of my doing that before I actually change the portfolio. So that's, I think, a really useful feature as well. So we're back to the main page. I didn't change it. I want to stick with the core. Here's the target allocation. Within the core, I can adjust the target allocation. This is another thing that they allow us to do. And here I want to show you something I didn't know Betterment offered when I was looking at the account here in the last few days. You can basically create your own target date retirement fund through this target allocation adjustment. If I turn this on, I'm going to turn it. I'm going to turn it off. You can allow Betterment to slowly adjust your allocation as you move closer and closer to your goal. Could be useful for a house, for education, obviously for retirement. We can look at the allocation over time. In my case, given all my inputs, this is how it would adjust. So again, you might want your investing to get more conservative as you get closer to needing the money, right? So that's the idea behind it. And I didn't know they offered this feature, but I thought that was pretty nifty. I'm going to turn it back off because I don't want to do that. And we're going to come back out of that, but I wanted to show you that option. And then we can go, they have a portfolio analysis that I sort of skipped over, but one of the things they'll do is tell you how you are on your goal, and actually it's planned. I just want to show you this. So I have a less than 20% chance of meeting or exceeding my goal, but of course I'll be adding to this. So we'll see how that changes over time. Who knows? Maybe I can get to that goal by 2040 with just The only thing I'm putting in here are credit card rewards. So we'll see. You can see the holdings. We've looked at that, but I'll just show you the tab briefly. And one thing I really like about Betterment, it's just a very simple, easy to understand, clean design. And we can look at each one. The activity, we don't have any yet. So, but if there were dividends, for example, or you made contributions or took money out, we could see performance. There isn't any performance yet, because again, the money hasn't hit the investments yet. But that's where you would see performance. Interesting thing too, they talk about drift, and drift is when the portfolio is sort of allowed to drift from your target allocation, and they will allow that to happen. What Betterment does is rebalance when it reaches 3%. You can see that in the note if you can read it, and you can learn more about that. And I'll leave links to Betterment and some of their articles below this video so that you can check it out. The last thing I want to mention, and I know I've kind of gone through a lot, and frankly, I haven't even gone through it all, but you can set up tax loss harvesting, which I have already done. And so what this will do is automatically sell some investments if they're at a loss. They'll avoid the wash sale rule by investing in a similar fund that covers the same asset class, but maybe in a slightly different way, to avoid the wash sale rule, but to keep you invested rather than, say, waiting the 30 days. And so what I'm really interested in, and one of the reasons I stuck with the core portfolio that's got 11 funds in it, is over time, I want to see just how valuable the tax loss harvesting is. I'm basically going to be the crash test dummy for you guys. So as time goes on and it actually has some tax loss harvesting, I'm assuming it will, then I can let you know how that works out. But that's sort of a quick run through of Betterment. Again, it does more things. Again, if you added IRA accounts, you could use the asset location features, which I'm not. But overall, I really like it. There's one thing I don't like, and that is they don't really have an iPad version. You can actually download it on an iPad, but what you get is the phone app version. So it's real narrow. It looks like an iPhone in the middle of your iPad. And people have asked for it for many, many years, and it just hasn't come around. I think the reason is although I don't know that Betterment's ever officially said this, is you can just get it on Safari on your iPad. And so that's what I've done, and it works just fine. But I do kind of wish there was an iPad version. There is an iPhone version, and it's very slick, works very well. It's very easy to use, and very easy to see the performance of your account. So I like the iPhone version a lot. I kind of wish there was an iPad version, but again, not the end of the world. So that's my take on Betterment. A quick run through of my initial take, having used it to set up my credit card rewards. And I will keep you informed as, again, we see the tax loss harvesting, and who knows, maybe I'll hit that goal by 2040. I'm not going to change it. We'll see how it does. So there you go. If you have any questions, leave them in the comments below. I'll be happy to help you out any way I can. And until next time, remember, the best thing money can buy is financial freedom.